General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's do the chart work. Week number 4, July 20 through 24th. NASDAQ drops. Netflix shit is 9%. Okay. SpaceX new all-time high. Under IPO prices, Starship launch gets scrubbed. They're playing because we really ain't moving nowhere. The economic calendar. Nothing Monday, Tuesday, or Wednesday. But Thursday, we have European, that's their monetary policy, their Fed fund rate, and unemployment at 8:30, with the ECB press conference at 8:45. So, not too much for the U.S., but this is still important because the euro is so like the major percentage share of the dollar. We'll keep that on the radar. Euro monetary policy this week and unemployment Thursday morning. S&P 500. Commercials are mildly bearish. Small traders are aggressively bullish, and open interest is falling. I would expect consolidation first, with the downside reversal risk if seasonal weakness and price breakdown confirm it. See that we're closing up, taking profits on longs, closing out shorts. The non-commercials are positioning bullish. NASDAQ high is neutral to mildly bearish on the surface, but much less threatening than the S&P COT. Small traders are bullish, large specs are bearish, commercials are almost flat, and open interest rose slightly. I would expect consolidation, with the edge coming from price confirmation and seasonal cycle alignment. Non-commercials are closing all their positions out, but they're adding on to the longs on NASDAQ, so they're buying up this dip. Non-commercials are bullish overall, and they're adding to longs, so that's kind of interesting. Just the cut positions overall. Gold has been super bearish with People still buying it in. They're just buying that dip. Oil is going to be interesting, but overall, it's still bearish on the commercial side. Dollar still bullish on the commercial side or non-commercial side, because this is non-commercial positioning with the 13-week averages. The Fed watch didn't pop up today. I don't know what's going on. It's like something wrong with the site. It's still not popping up. For the earnings, mm, nothing really can mess us up besides Tesla, Google. IBM is starting to become a big deal because I think they're going into other tech spaces, but it's not on my radar. Intel, that's a propped up big deal. It's not really a big deal, but I think they're trying to be. So yeah, Wednesday is the only day here that really catches my attention. Wednesday, Tesla and Google is the main event for the week. Sentiment back around 40%, which is normal because it's like meme version. Go 40, go down, go 40, go down. So this can come down. I don't expect it to be one-sided yet. Maybe like a news event, peace in the Middle East or something, then everything just becomes salad days. NASDAQ. Not bad. You see how since June started, we just been consolidating this whole month. Finally took out that kind of like accumulation, manipulation, distribution. If the 40-day low seems like a logical target, anchor point interaction, June open price is the anchor for this month. We haven't made the low of the month yet. Story price alignment. This looks much more like a crowded AI chip positioning or chip positions getting reduced with oil and geopolitical concerns and pressure. Set up confidence plan, we're going to be defensive because the summertime chop is not no game. S&P 500, this it's a lot stronger. We're nowhere near the 20-day low. We're only at 50%. Yeah, this will be a good spot to reaccumulate too, the 20-day. But this is our current anchor because the last reaction we got, which is opposite of NASDAQ, because NASDAQ, that bearish order block is still holding true. Anchored from the overreaction here. This could be a type 2 expansion. So we probably just dip down a little bit. Maybe sweep this, respect this wick, then buy up from there. Seeing the dip there, this one's strong, maybe 20 low could be we anchor from the OB reaction, type 2 expansion. The sales are like let's throw SPY, I'll wait for the buys because it seems they all won't end before the next plateau. Yeah, I don't really see us dropping super crazy to the 200 EMA or something. Something has to happen bad, and it can't be the world. They pop back off. Set up confidence plan, defend, summer doldrum protocol, looking at NVIDIA. It's a nice retracement. Still kind of bullish. Clean bounce off the 200 for NVIDIA. This retracement is getting bought up. Anchor point reaction is a 200 bounce. NVIDIA is set up to be king, with everything being sold out for years to come. Set up confidence plan, engage. I think this could be a swing. This looks like a good buy hold, especially with all the good fundamental side. Skill focus. I would stop treating a losing read like it deserves multiple entries. Journaling intent. Upgrade my trade Zeller. My Notion is nice already. Case study hunt plan. No case studies. OSI. Weekly risk block. 1% for the day trade. This base hits. This summer 20 points is good. Playing strike day Wednesday. Big earnings on Wednesday could give us the anchor for the week. And then that's that on that. Y'all have a good day. Peace.